when you save your money in the bank, you're guaranteed to lose. Guaranteed to lose, because your bank is not going to give you enough interest to cover inflation. So saving your money in the bank, while it is safer, is a guaranteed loss. And if you're okay losing that value, sure, but you gotta make the decision for yourself, because when you save your money in the bank, it's a guaranteed loss, which is why people are starting to get worried, starting to looking for alternatives. And that's where the things that I've been talking about, you have to get financially educated, because the reality is, man, this inflation isn't just going to go away. The prices of things are not just suddenly going to drop. Sure, you might see the prices of some things go down because companies overproduced in 2021 or 2022 rather. They're overproducing, and so they made all these orders. Demand goes down. They have a bigger supply. You can see the prices of some things drop, but the cost to produce these products is not going to just suddenly go away. If a manufacturing company used to pay employees, let's just say $9 an hour, and they pay them $18 an hour, they're not just going to suddenly take these wages and push it back down to $9 an hour. They're going to be paying $18 an hour. And if they're paying 50% more for the raw materials, for whatever they're getting overseas, they're paying 50% more for their products, whether it's cotton or metals or whatever they're paying. They're paying a lot more to get the supplies to build their products. Unless they could get a massive break on this price, how are they going to increase their margins? And so what we've been seeing happen is you have two inflation indexes. You have one for the consumer side, and then you have some for the producer side. The consumer side, everyone talks about CPI. That's the kind of what the media talks about. Now, CPI, Consumer Price Index, again, this isn't a true measure of inflation. This looks at certain data points and says that this is the average inflation that some people see, but the reality is it doesn't really give you a very accurate depiction, because CPI says 6% inflation. Well, if your rent went up 15%, what is 6% to you? If your milk that you want to buy is 20% more expensive, it doesn't give an accurate report for everyone. But CPI is on average of what some people are paying for certain things higher. But then you also have the inflation that you see on the producer side. So CPI, again, is on the consumer side. Then you have producer inflation numbers. These producer inflation numbers have been higher than CPI. What does that mean? You have companies that are producing products that are also seeing inflation, right? They have to pay more money to get their raw goods. They have to pay more money to produce their products. But they haven't raised prices as much as their costs have gone up. Now, some of the reason why companies hadn't raised prices all the way is because the Fed keeps telling them not to. It's transitory. Inflation is going to go away. And so companies don't want to raise prices because they don't want to lose the trust of their consumer. They don't want to lose customers. And so they've been eating up that cost. But there's only so long that they can do that for, right? I mean, you saw dollar stores start to raise the price of their products above $1 for the first time in 2021, right? That was brand new. Mm-hmm. They don't want to do that, but they had no other option. And we're starting to see more and more companies starting to hit a point where they're realizing that, holy crap, this inflation might not be temporary. We might not see the price of our products, our raw materials go down. And so they're being forced to now raise their prices. And so in 2021 and into 2022, what we saw was that the producer inflation is higher than the consumer inflation. What does that mean? That means these companies are making less margins. They have smaller profit margins because their costs have gone up more than what they're selling it for. And so people will say, greedy businesses, they're raising the prices. But it's interesting that, yeah, they are raising the prices, but they haven't raised their prices as high as their expenses have gone up. And so there's a chance that we could see the prices of products continuing to go up because companies might say, okay, we were able to balance out some of these lower margins because we had such high demand. People were spending money like crazy in 2021. And eventually they might say, okay, well, we need higher margins. We can't sustain these lower margins forever. So they might have to raise their prices. And so the whole idea of, prices are suddenly going to drop, which is what the Fed keeps saying. I mean, come on, be honest. Be honest with the American people. The Fed is the enemy of the American people. They're lying. They keep saying that it's going to go away. What does inflation as transitory mean? It's been a year. plus more than a year of transitoriness right now. How transitory is transitory? And so it's like you just keep lying and saying the same old like thing again and again and again, hoping that people will believe it. But like, I mean, let's really analyze this. What does that mean? I mean, the best case scenario at this point is really that inflation cools down. Inflation cools down means that we go from high inflation to regular inflation, like what the Fed has been talking about, 2% inflation or whatever the numbers were. The reason why they didn't take any action in 2021 was because they said that they had this target of 2% inflation that they wanted to hit. Well, month after month after month, we saw higher than 2% inflation, but they didn't do anything about it because they just kept saying we want to see our inflation targets, we want to hit our economic targets. So it's like they just keep changing the narrative. We want to see 2% inflation so we can grow our economy. We saw, like in October of 2021, we saw it was like 6.2 or 6.4% annualized inflation, 6.2% I think, 6.2% annualized inflation, and then they change it and they say, well, we want to see 2% inflation, but more we want to see economic growth. So they just keep changing the narrative that they have. And so it's like, okay, you have to really start thinking about how do you protect yourself? Because the Fed hurts the average American person. The average person who's not financially educated now doesn't see wage increases enough to cover these higher expenses. And the Fed looks at, they don't look at CPI, they look at massaged numbers. Actually, this was a huge debate that happened in 2021. I made a video on this. Michael Burry called out the Fed, said they're liars, because what they said was in their report, they don't look at these inflation numbers as they're reported. They take the inflation numbers and then they remove the outliers. So they remove the top 34% and they remove the bottom 21%. So like if I take this chart right here and I plot a whole bunch of inflation numbers, so some are really high, some are really low, and then I remove the top 34% and then I remove the top 21%. So now more than 50% of the inflation numbers are outliers. What does this leave you with if this is what you have left? Well, it's a smoother inflation line, when in actuality you're seeing inflation more like this, or you saw more inflation like that in 2021. So the goal is, okay, inflation cools down. Let's say inflation cools down to 2%. What does that mean? Well, then that means the prices of goods are probably going to continue rising. Not by the same rate that we saw in 2021, but by a slower rate. So that's kind of like what people have started to come to terms with is, yeah, the price of some goods might come down, but the reality is prices of things are probably not going to go back to what they were in 2018 or 2019 or early 2020. They're probably going to stay high. And that is, I mean, it's becoming more and more of a reality, because how long can you say that inflation is transitory for? 20 years? I mean, the dollar was taken off the gold standard temporarily in 1971. And last I checked, we're still not on the gold standard. So I mean, you could say it's temporary for, I guess, your whole life, but I mean, it's just, that's the situation that we're in. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.